Hello everyone and welcome to Day Trader S&P 500. Today is Friday, December 23rd, 2022. This is Dale Woodson, editor of Woodson Wave Report and Day Trader S&P 500 YouTube channel. Want to get our YouTube people caught up. Well, we canceled our Christmas trip because of the weather, so we're here. We may as well do a report and get our YouTube subscribers up to date with our monthly subscribers to our newsletter. I want to start with the Qs. Here we have the B wave high on August 16th. We have 5 waves down in italics for a larger wave 1, wave 2 up, near perfect 50% retracement as you can see there, and we have the pattern drawn out for wave 3. Wave 3 gains equality with 1 at 216. That's our minimum target. The larger wave C here, there's an A down back here. There it is, okay. And there's the B up, and C gains equality with A at 195 in arithmetic scale and at 220 in logarithmic scale. So that's what we're looking at with the Qs. I want to go to the US10-year because it's been a while. We used to cover it every day, but I'm looking at this at a daily chart. We're going back to the August low, and we have a move up here. We had a Fibonacci target 1.272 extension at 4.434, and it hit a 4.335. Okay, and from there, I don't know if you can see this. I'll draw this out for you guys. I think we have a 535 correction here. There's 1, 2, 3, 4, 5, 3, 5. You can see it right there. Okay, so that's an ABC. Let me remove that and just put the actual correction on there. Okay, and then we have 1, 2, 3, 4, 5 for A, B, C, and I think I have that labeled wrong here. 1, 2, 3. There's the A up here. My apologies. There's the B. There's the C. The point is, it hit right on the 50% retracement of this most recent rise from the August low to the October 22nd high. So that looks like a three-wave correction to a perfect 50% correction. So we're looking for this pattern up here. We'll get it down to a smaller time frame and analyze it, but we look for 5 up, 3 down, 5 up to go above this high here. Otherwise, the further correction targets are down here. The 618 is at 3.216. Okay, so that's it on the US 10-year S&P 500. Excuse me, cash index. Here's the bigger picture from the all-time high almost a year ago in early January. There's 5 waves down for A in parentheses. There's the B wave correction up, direct hit on time and price, 43.25 and 8.16 on the turn date. And you can see we have a 1 down, 2 up, 3 down, 4 up, 5 down for wave 1 of C. There is wave 2 of C, almost to the 786 retracement, hit 4100.96 on the 13th, which is a nominal high over the 4100 on 12/1. We had a 12/4 turn date, and you can see it's sold off from there. Okay, so we have A down here, B up here, C down equals 31.43 in arithmetic scale and 32.64 in log scale. We're going to look a little closer. I think we're going to look at it from this December high, counter trend bounce in wave 2. You can see this red trend line caught from the all-time high, the wave 2 high, the wave B high, and this wave 2 of C high. Okay, poked above it once and then again, and then said resistance becomes support, and there we go. Okay, so let's get a little closer look here. We're going to look from that 1213 high, which I think I labeled it as I did that in futures. Never mind, blow off top. Okay, so now we're looking at an hourly chart from that wave 2 high, 4100 on the 13th. We got 1 down, 2 up. You can see the third wave extensions here. There is the 1.618. There is the 2.618 at 37.69, and it hit 37.64. So let's do a little quick analysis. If that is 3, where does 4 go? Let me do a fib retracement of 3. This will be pretty darn close. and there's 382 at 38.75, which is near the fourth wave of one lesser degree. This would be a 1, 2, 3, 4, 5. Okay, this thing could be extending. We'll see how it works out, but I think I have a couple different wave counts. Excuse me, on the futures. Okay, let's see what I think. We'll go on to the futures here. Again, here is the bigger picture: the A down, the B up, the C down, 1 of C, 2 of C. There's the blow off top I was talking about. You can see in futures that high on the 13th went considerably higher than the one on the first. That's because these little purple circles here are where the contract rolls over into the next month. You know, we had December rolling into March, and you may or may not notice I got the continuous monthly here. I don't just put the December or the March, so it rolled over, and that was the difference there. Okay, so there's that blow off top, 41.80 on 12.13. You can see 1 down here, 2 up in black parentheses, 3 equals 1 at 33.55. On the larger picture, we have wave A down here, 36.39, wave B up, again, direct hit, price and time. Wave C equals A at 31.59. Let's get a little closer look. I think we'll look at that wave 2 high next. There is that wave 2 high on an hourly chart. This is why I have 2 different wave counts. This is the futures. Excuse me, the one in black is a 1 down, a 2 up, 3 down over here, and a 4 up. And this move here yesterday was significant because a move down below that low indicated that this move up, whether it's a 4 or a 2, and the 4 is in black, which is the preferred count, and the 2 is in red, which is the alternate count, is complete. Okay, unless or until the market moves above this 39.19.75 high, both of these counts are valid. Okay, so from this wave 4 high in black, wave 5 equaled 1 at 37.66. So far that low as of yesterday is 37.88. We'll see how that plays out in the alternate count. If this is 1 down and that's 2 up, 3 gains equality with 1 at 35.43. Again, this move down means that the move up on either count should not go above 39.1975. If it does, it's wrong. We always want to know where we are wrong. And I think we can look at this even a little closer. From that 39.1975, we have a 1 down, a 2 up, a 3, which equals a little bit more than a 1.618. And there's the 4. And you can see as we are speaking, a couple things happened. But that 4 is, again, this happened a lot in a lot of these declines where 4 butts up right up to the 1 and even slightly overlaps, which could be a leading diagonal triangle. So that is an unbelievable risk reward, low risk, high reward, or we call it projected risk measured reward in our trading service, where let me get in that real quick here and I think about it, where auto trades are done by Striker. Okay, and I put in a trade right before this thing this morning, but that's it there. They will auto trade my signals. If you're interested, contact them. They are a futures broker. But again, that was a great setup, and I think I got short right around excuse me, right around here somewhere. Okay, so slight overlap. I think it is hard to say, but it's right up against it. So your risk is a couple points and your reward is, you saw the targets, they're down here. Okay, we need to get below this low here. So if this is 1, 2, 3, we need to get a new low. You can see our targets there. Okay, 37.66 would be a Fibonacci, what I use the adjective for Fibonacci perfect target. So in terms of pattern and price, this fifth wave looks 4/5 complete. This could be a 1 and a 2. We'll see how that works out. But that's where things are. Let me see if I got a couple things to show you guys. I usually have a picture. There is the picture, the hourly bar. Okay, there's where, whoops, 3 equals 1. And I think I messed that up. But let me get back to, I think I have it on, here we go. the pre-market open that we put out earlier this morning. I get up early. Wave 5 down is in play. There's our targets there. Okay, there's the make or break, 3919.75 for both wave counts, the one in black and the one in red. Okay, that'll do it. Today is Friday. Markets close Monday. Merry Christmas and happy holidays to everyone. And we'll talk to you again next week. Take care, everyone.